Look, the numbers are fine as of now for China's exports, but that's because global trade numbers are also fine. And, we saw something similar in 2018 when initially tariffs were taken up. It took some months before we started to see global trade slow down and global capex slow down. In this cycle as well, we're expecting that you will have to wait for another 2-3 months before we start to see the overall trade slow down. So China can increase market share as it did in 2018, but to the extent to which there will be that global slowdown, they'll not be able to avoid that into their numbers in the back half of this year. And then as far as the transshipment is concerned, look, it's going to be very difficult to observe that and identify what you call as transshipment, because in 2018, China actually did probably send a lot much more components before they were assembled in other places like Vietnam and sent over to the US. But now it's actually genuine manufacturing in Vietnam that the Chinese companies are doing. And from our analysis, the import content from China is down to like 30-35%. So it's not as if they're importing 80-90% of the components from China and then shipping it out to the US after assembling. This time it's going to be more challenging for the US to address that transshipment issue.
Okay. And Chetan, I know you've been doing a lot of thinking, a lot of work on the Chinese currency, the renminbi. What is your latest thinking there?
So in general, our view is that RMB will appreciate less than the other currencies in the region, but broadly to the extent to which we're expecting the dollar to stay weak, that will help RMB to be in a small appreciation kind of trajectory. The reason why we expect RMB to appreciate less is because of this whole deflation challenge that China is facing. And we think in an environment where China has deflation problem, they shouldn't really be allowing a big appreciation in the currency. And at the same time, you have this trade tensions, and China has higher tariff than other trade partners. That also makes it difficult for RMB to appreciate more than other currencies in the region.
So is there a certain range that you're watching for the rest of this year for RMB? And could you just elaborate on that idea, Chetan, a little bit more? Pursuing currency deep appreciation on its own would exacerbate deflation.
Yeah, that's right. Look, so I mean, in general, as we've seen in Japan's case, currency depreciation helps you to manage your deflationary pressures. And as I also mentioned, like if you have the tariff problem, and then on top of it, you appreciate your currency, that will make the export realization for the exporters even lower than what it would have been. And you already have an excess capacity problem. In that environment, you don't want to aggravate the margin pressure on the exporters by appreciating currency. So the existing excess capacity and deflation problem, on top of it, this tariff challenge, makes it very difficult for us to see that China can allow big appreciation. This question on currency appreciation, Sherry, comes in also from the point that Japan did resort to big currency appreciation in the 80s and 90s while they were having trade tensions with the US at that point of time. We think it's a very different backdrop for China, and China has probably learned from Japan's experience, and they are unlikely to allow a big appreciation even if there is pressure from the US side.